Welcome everyone to this Friday webinar. Thank you so much for joining us. We at PMSAF World have been diligently organizing these webinars with fund managers every Friday to educate you, to keep you updated with all the new good products that have been coming in the market, and then from time to time discussing various macro and micro issues which are concerning investors all the time. In this regards, last Friday, we did a very interesting webinar on topic India Unstoppable, where we had, understood the conviction of the fund manager. Obviously, all of us Indians have a great conviction, but understanding that with data and that too from successful fund managers who have made money from equities kind of, reiterates and enhances the confidence. In that context, today's webinar is on India Inflection Opportunities Fund, which is a category 2 fund which invests in growth opportunities, which are like those businesses which are at the verge of big bang breakout, those businesses which are unlisted today and are somewhere hidden, but after understanding them, if it is realized that these are growth businesses, and when India is at its inflection point, obviously if economy as well as business both are at an inflection point, there cannot be a better combination than this. But obviously not all such businesses will be great. There could be a risk in investing in these businesses. Hence, investing in such businesses through a credible fund manager who, comes with a more than 2 decades of experience and also, has worked in this area in the past is something that we kind of, want to understand today. So this webinar is with Mr. Nishad, who is the fund manager and who heads this India Inflection Opportunities Fund. Fund has single-handedly raised, a substantial corpus for itself, and some of the marquee investors have invested. I have personally attended this presentation. It's a very interesting presentation. I'm not trying to raise your expectations, but just trying to give you a very optimistic and right perspective before we begin. Welcome, Nishad, to this webinar. So, we do these webinars every Friday, and in this webinar, in the first half, you should be running the presentation for your fund. And then in the second half, maybe after 30 minutes, we'll take questions and answers from the audience. Welcome once again, and over to you.
Thank you, Kamal. Thanks for the nice introduction about our fund. And once again, thanks to encourage me to come on this platform. Really, really delighted to be here. And good evening, everybody. My name is Nishad Khanolkar, and currently, as Kamal has said, today we'll be discussing India Inflection Opportunity Fund. I would try to keep it a bit simple, but we do have Q&A sessions. So before I jumped on to the India Inflection Opportunity Fund, which is a SEBI registered category 2 fund, which basically invests into the unlisted segment, I would like to give a brief background about the investment manager, which is Pantomath Group, which is managing this fund. So Pantomath is one of the, many of you know the Pantomath from IPO perspective. So Pantomath is so-called India's largest mid-market investment bank. And we have a prominent presence when it comes to mid-market IPOs. So we have done a significant amount of IPOs. If I have to put a number across to it, then almost 104 IPOs that we have done. The 105th IPO would come for listing by maybe next week. So that's the story about the Pantomath. Pantomath is also working with its support system, and it's very important to know that fund manager is not the only person in the fund who can make the fund successful. Fund manager should have in addition to his team, the fund manager should also have the proper support system. So our support system includes Pantomath has recently invested into a very well-known broking firm called Asit C. Mehta. You all know Asit C. Mehta, Dina madam, who was the first lady chairman of Bombay Stock Exchange. So Pantomath has got 50% stake into the ACM. Pantomath also owns a startup venture called Copgenie, wherein we incubate all the startups. Pantomath owns a startup called Capso, wherein basically we can give all the information about. So basically, it's in lieu of due diligence, rather than spending 6 months on due diligence, the aspects of due diligence can come within maybe 2 or 3 days. That is all the Capso is all about. So Pantomath has made its fortune by acting as a merchant banker. While doing so, it's obvious that when you have done so many IPOs, you have definitely made money for the investors. So first of all, before jumping to the fund, let me explain you what forced us or what prompted us to launch this fund. So the investors who have been consistently investing us with IPO, after a point of time, we launched our own prop book, and we started making investments through our prop books. We made 4 investments through our prop book, and all 4 were successful. So name few, you all must have heard about the company called Magenta. So we were the first guys to cut the check for Magenta at 30 crore rupees, very small amount. Then a US-based HNI came at 110 crore. And over a period of time, just 2 months back, giants like British Petroleum and Morgan Stanley came and invested $22 million into that company. Axiom, which makes the DC-DC converters inside the car. I'm the director of Axiom. When we had invested 2 years back into Axiom, Axiom was 20 crore top line, then 43 crore and 110 crore. Unfortunately, people have forgotten nowadays to talk about the book value, but this I'm talking about the book increase of the numbers. So what happened that the people who have investors who have invested with us in IPO and the investors who have been investing with us in prop book, the same investors came and told us that if you want to go big, then you have to come under the regulated environment, because that's where the bigger fund lies. So that forced us to think about launching a fund which comes under the regulated environment, and that is called India Inflection Opportunity Fund, a SEBI registered Cat 2 fund. So right now I explained about what forced us to launch this fund. I would like to give a short presentation stating about the concept or the themes based on this fund has been incorporated. Kamal, I'm just sharing the screen. Just let me know if the screen is visible.
Sure.
So, Kamal, is my presentation visible?
Yeah, but you need to change the mode to the slide mode.
Is it good?
Yeah, absolutely.
Thank
So
you.
before you begin, I would suggest that you should also share who are the founders, who are the promoters of this company that you're talking about.
So Pantomath was incorporated by Mr. Mahavir Lunawat and Madhu Lunawat. Mahavir Lunawat is a rank holder, is a gold medalist company secretary, and he comes from PwC and Reliance. And Madhu is also a rank holder chartered accountant who was the youngest CFO of the Edelweiss Asset Management, and they have been running Pantomath since 2012. So I'll come during the presentation more about the investment committee when we go much in detail. So if my screen is visible, which I believe is, what I presented right now is a complete life cycle of any particular company. I'm straight away starting with this point. This point is called as the point of IPO. Very rarely a fund manager would straight away start from the point of IPO, because this is going to be my exit point. My entire fund thesis has been designed based on this particular point. And what is going to be this particular point? So I'm going to exit over here, and my entry is going to be based on this. So most of the time people talk about the sweet spot of the entry, but maybe I would talk about the sweet spot of the exit, and the entry would be designed based on the sweet spot of the exit. So this is called as the post-IPO scenario. We call it as the element of uncertainty, because if you really see last 4 years, the number of IPOs who have come, more than 70% of them are trading below IPO prices. If you ask the analysts will give you hundreds of the reasons why they are trading below IPO prices. If you ask me, my simple answer is post-IPO, the people who have bigger money than you, they have license and liberty to play your stock. Basically, I'm talking about the mutual fund. So my point here is that mutual fund have become too big. PMS and mutual fund are giving extremely good returns in this particular point of time. But today's world, in this area, who is entering is retailers, and who is entering is mutual fund. The HNIs and the family offices of India are today making money in this particular part of the world, which is called before IPO. For the simple reason, family offices have realized that they do not have the...
Nishad, may I just interject here? So first of all, on the bottom there is this event thing that you just need to move it down.
Is it okay?
Yeah. And also I just request you to kindly keep your speed slow.
Okay, thank you. So today's world, the people who are making most of the money, or HNIs and the family offices, is particularly this sector. Here, basically, family offices are making the money. So what exactly is the sweet spot I'm talking about? A simple question somebody would ask: how many IPOs India has seen in last 4 or 5 years, which are more than 5,000 crore? The answer is maybe 4 or 5. But slightly tweak the questions that how many IPOs India has seen over a period of last 4 or 5 years, which are in the range of 3,000 crore or maybe less than that. The answer is more than 200. So in spite of being the 4th largest GDP, in spite of being the BSE being the 8th largest stock exchange, we personally believe that India's appetite to go for IPO is maybe the India's sweet spot of IPO could be in the range of between 3,000 crore to 5,000 crore. Because look at the people who tried to bring the IPO above 5,000 crore, they are all big brands without naming anybody. They had everything which is required to do the successful IPO. But in spite of that, they were either delayed the IPO, or maybe they have derailed the IPO, or maybe the IPO has not come at an appropriate price. But the IPOs which are below that have come without any name or without any good investors. They have been doing well. So this is the point. So my exit point is going to be somewhere around 3,000 crore to 5,000 crore. So if my exit is going to be 3K to 5K crore, so what is going to be my entry? So entry has to be somewhere around 1,000 crore. Now, till today, what I was doing, I was acting as a merchant banker. I was in this space, basically coming at pre-IPO and exiting at IPO, helping investors to get money over here. So I was like a merchant banker helping companies to do the IPO. That's precisely what I've been doing. Here, the game was at least 6 months to 9 months period I was handling. Now I'm going backward, trying to invest in a company, holding a management position. Earlier, I was not a part of the management. Now I'm a part of the management. So today I have a say into the management, and I have 3 years plus 6 months to do the complete process. So today I have a better control over the company to really take them to the IPO. So in nutshell, if I have to explain what I'm doing is companies which I believe are IPOable, I'm going to invest them in today, which are IPOable in next 2 to 3 years. And I myself is going to bring their IPO, and I'm going to exit on the day of IPO, because that is something which I can do. So now let me come to the point, what is going to be my startup point. So where I'm going to invest? I'm going to invest in a companies who have passed the survival test. Not a startup at all, point to be noted, because startup is something which, even though I have a successful track record by investing in a startup, but startup is something where I personally feel that 3 years or 4 years bringing their IPO is really a tough task. So what is survival test for us? Survival test for us is a company who have at least passed point number 1, at least a revenue of 200 crore to 500 crore. Point number 2, most important, promoter has minimum 90% stake into the company. We do not want a diluted company. And point number 3, the company has to be PAT positive. Reason being, when you go for DRHP, you have to file 3 years balance sheet. So out of which, if 1 year is negative, the IPO becomes difficult. So all these entry points have been designed keeping in mind what is going to be my exit point. So this is the company which has passed the survival test. Now what we are going exactly over here. This company are typically called as the MSME company. Let's not go by the strict definition of MSME, that is slightly complicated. So you can take any company in the range of 300 crore, 500 crore top line, and which you are known. So typically this company requires something beyond vitamin M. Vitamin M means money. Most of the companies in the range of 300, 500 crore are deprived of artificial intelligence. Nowadays, you cannot move without artificial intelligence. They are not having machine learning. As I told you, we have a Cop Genie, which is a completely startup entity, which helps them with the artificial intelligence. Most of the manufacturing company do not have value engineering. Unfortunately, nowadays concept has come about hire company secretary. I'm sorry to say that, but that is a classic disaster recipe for failing in DRHP. Very rarely you will find an IPO which has been successful with a hired company secretary. So basically, point over here is that you need to take a MSME, and MSME, if you know the pain point of MSME, and if you have the ability to cure the pain point of MSME, MSME is bound to grow. That is the most important factor. So now where does this company are coming from? Since we have been in this industry and we have been doing so many IPOs, so today maximum value is for data. Data is the most important thing. So when we have done so many IPOs, we must have seen more than 1,000 companies. So today we have a data of them. Most of the companies we have said no for the sake of IPO for the different reasons. If I have said no to them, at least today I know why I have said no to them. So my point is, after 700, 800 companies which I have said no to them, I have the database. I need to select only 10, out of which 2 I have already selected, whose pain point I know, and I have the ability to cure the pain point. That's what my game is. Identify company, that is from our own sources only. We are not going outside market to search the deals. So identify company, solve their pain point, help them to grow in revenue on the books. So typically in this segment, we get upside from 2 transactions. Point number 1, increase the revenue on the books. That is point number 1. And bottom line here, increase play on the EBITDA arbitrage, or you can also call it as a PE arbitrage. EBITDA arbitrage or PE arbitrage is something which is very easily available or conveniently available in the unlisted space. You take any listed segment. Unfortunately, in listed segment, EBITDA arbitrage or PE arbitrage is not that common, because 2 listed companies having the same turnover, having the same profit margin, their PE multiple is almost running somewhere around same. If somebody has 30 PE, Similar company would have somewhere around 28p. You will not get much of a difference. But if you see the unlisted to listed, you get at least, we call it, there is a birthright to ask for at least 30% discount. So your ability to gain that 30%, it just convert from unlisted to listed, and you're bound to get that 30%. So I repeat, first point is help them to grow revenue on the books. And second point, help them to convert by listing unlisted to listed and try to gain that EBIT arbitrage. Let's take classic example. My second investing company, which I have entered a P of 9.5 around 8 months back. Today, the listed segment is sitting at a P multiple of 22. Even if I try to bring the IPO today itself at a P multiple of 18, which is almost 40% below the market, for me, it is a 2x game just by doing unlisting to listing. So this is a kind of a point. So that is the reason we say unlisted companies to listing company. Most of the family offices are putting money because they feel that you can make extra money. Risk is always there. You can make the extra money in this particular segment. So how to make it a protective world? In equity, unfortunately, there is nothing called as a protection. But we try to create a protection amongst our investing companies. So when we enter into any company, shareholders agreement or a share subscription agreement, we take the right to do the IPO of the company. We have created a 4-layer mechanism. Point number 1, we take the right to do the IPO of the company on the day one we invest. However lucrative the company is, if the company is not willing to give me an IPO right, I'm sorry, I'm not willing to invest in your company. It's like you're blocking my nose to breathe. Point number 2, failing which if the IPO doesn't come, I have a right for a stake sale. I have a separate department for mergers and acquisition. Point number 3, which is most important, which triggers 6 months after that, a promoter has to buy me back at 18 to 24% IRR. And point number 3, if that also doesn't happen, then 6 months after that, I have a charge over the assets. So first point, 30 months IPO. Second point, 6 months after that, stake sale. Third, 6 months after that, promoter has to buy me back at 18 to 24% IRR. And fourth is charge over the assets. So when you go with a 4-layer security, that is the only thing we can create the security amongst our investment. Why this security has been created is very important. See, every fund, I believe, has 2 or 3 multi-baggers. I am fortunate that today only I have cracked, out of 2 or 3, I have cracked 1 multi-bagger. The game lies is how do you handle the rest 7 or 8 non-multi-baggers? If you try to protect those 7 or 8 non-multi-baggers, that's where that alpha lies. That is precisely the game of fund management. So such kind of a mechanism where if you invest with a backup plan number 1, 2, 3, 4, which I said, the so-called non-multi-baggers, out of 8 or 10 investments I am going to do, I also have 2 or 3 multi-baggers. I may not have 7 or 8 non-multi-baggers. So in non-multi-baggers, I am trying to protect your alpha. So what I do, I always invest in asset-backed companies. The reason being, number 1, in today's world, so in spite of Zomato and Nazara, asset-backed companies are easy to do IPO. You may not get a dream multiple of 50 multiple or 40 multiple, but you get a good multiple in asset-backed company. Second, in asset-backed company, your bottom line gets protected. Again, I'm talking about the alpha that you are protecting in a non-multi-bagger. So this kind of this thing does help you when it comes to IPO. So basically invest in an asset-backed company, which has the definite potential to grow. So this is all the summary about what we try to do. If I have to summarize in one particular line, then invest in a company who has passed the survival test, identify their pain point, try to solve their pain point, grow them on the books, and play on the revenue multiple, play on the EBIT arbitrage, and exit on the day of IPO. So this is what I'm trying to do. Now let me explain you about the 2 investee companies I have invested and how I am doing the value addition to that and how my LPs are investing. Most important factor of AIF2, if you try to see any other AIF, so if you, the per investor ticket size of AIF is 1.5 crore to 1.6 crore, which typically means if you see a 500 crore AIF, the number of investors will be 300 to 350. I would say I'm blessed with good LPs because my AIF has a per investor ticket size of 6 crore, mainly because most of them are the repeat investors. See, 1 crore investor comes with only money. 5 crore investor comes with money and knowledge, but a 20 crore and a 50 crore investor comes with money, knowledge, and the entire baggage of support. So classically, let's take how the fund has performed till today. The fund has made 2 investments. The first investment is out of Nagpur-based specialty chemical company, currently running at a 38% EBITDA. So the guy is an IIT topper, very intelligent guy. But today, we are helping them to do the entire recruitment of his marketing team. We are helping them to recruit his CFO. Maybe sometimes a technical guy is not equipped to do all those kinds. The second investing company is a Rajkot-based company having a turnover of 400 crore. Today, that company is making an acquisition of a 200 crore company. Now, imagine a 400 crore company acquiring a 200 crore company. How much time the promoter or the CFO would end up spending that acquisition? You all know 85 to 90% time would go in that acquisition. But today, that entire acquisition is happening from my desk. Because I'm the investor in that particular company, I would not do something which is detrimental for the interest of the company. So basically, each and every company would have different pain point, but you need to resolve those pain points. So two companies, the history just now I told that the investors are backing our investment. So we cut the first check and somebody follows us. That trend was there when we used to invest in prop book also. And that trend has been continued when I'm investing through my fund also. So let me come clear. The first investment company, I have invested 30 crore in the month of April 22. April 22, when I had invested in that company, the company was sitting on 98 crore FD. The guy was not required money, but then we had to sell him the dreams. And since then till today, in last 15 months, the company has attracted additional equity of 225 crore. Flat equity I'm talking about, no quasi-equity instrument, straight equity. That is 7 times of what I have invested. The second investment company, I had invested 25 crore. That was my second investment in the month of December 22. December 22 until today, the company has attracted additional investment of 200 crore, 150 primary, 50 secondary, 8 times of I have invested. So basically, in first company 7 times, in second company 8 times. Who are the investors? These are not the outside investors. These are my own LPs. This is called the blessings of having good LPs. We do give co-investment opportunities to our LPs. And that is the reason most of the family offices in India are preferring to invest in this particular fund. What family offices say, they are fully equipped to invest in this particular sector, which is an unlisted sector. They have many mutual funds, they have many PMS to play in this particular sector. They have their own team to play in this particular sector, which is a listed sector. But if they wish to play in this sector where nowadays alpha is extra, of course risk is there, then they need an expert who has been playing in this sector for more than 10 years. That is the reason they say you cut the first check and we will follow you. So taking the co-investment opportunity, nowadays family offices and HNS are investing in our companies. So I believe this slide has been understood, but the basic theme and the thesis of the fund lies in this particular shape. When we go for a Q&A, we can discuss more about this. So Kamal, I'm taking the liberty to go to the next slide. So in spite of that, still people come and ask me, Arey, you have not explained where do you invest? So we are sector agnostic, but looking at the kind of investors we have certain sectors which are no, which are like a scene industries, tobacco, alcohol, gambling, animal killing, and gaming. We do not want our children to play on the mobiles. We want them to go and play in the hard market. So that is the reason we always invest in an asset-backed company. So Kamal had asked me to introduce the management team. So in every fund, the most important team is the investment committee. So we have a 3-member investment committee, Ms. Madhulu Nawat. So she's a rank holder chartered accountant, and she was the youngest CFO of Edelweiss Asset Management. She is managing this fund. Along with this, all 3 have a unanimous power. Myself, as Kamal has said, I'm a 2002 chartered accountant, and then I did my CPA from Australia. Prior to this, I was a CEO of a Hong Kong-based private equity fund called SP Growth Partners. Vikrant has been working with me for the last 13 odd years. Currently, Vikrant is in US because our fund is ending on October. So we have asked Vikrant to stay in US and try to raise maximum funds for us. So that about the investment committee. Eminent advisors, they are not the decision makers, but they are the advisors to us. Many guys appearing on this call would know this name. This is a very familiar name, Dr. Kiran Patel. When it comes to Gujarati community, he would be one of the top 5 richest NRIs into the India. He's the single largest shareholder of Anupam Rasayani, which is a $1.2 billion company. Kiran sir would have a total AUM of $5 billion. He was my eminent advisor since the day 1 of the fund, and his entire EV investments in India is managed by me and Madhu. I was fortunate that 3 months back, Kiran sir had decided to invest into my fund. So the first fund Kiran sir would have invested is my fund, and I'm happy to say that. So Kiran sir was our eminent advisor, and now onwards he's our investor too. Mr. KK Jalan, since we work a lot with MSME, so former Secretary of Ministry of MSME, KK Jalan is also our eminent advisor. PF and ESSC rules were written by Mr. K.K. Jalan. Pradeep Udas, brother of famous singer Mr. Pankaj Udas, and his own identity is that in CA fraternity is a very common name, very familiar name. He was a founder of KPMG India, which is India's #1 CA firm. So these are our eminent advisors. Sector expert, this list will go on as and when we make investment number 3 and 4. Since we have done only 2 investments, we have 2 people. So Mr. Sanjay Patni, we all had Havemore ice cream. So Havemore is a classic case of M&A. You all must be thinking since like 20-25 minutes, this guy is talking about IPO. What if the IPO doesn't click? His second option is about stake sale. How would that M&A happen? So this guy, I would say, comes handy over here. So Havemore had sold its company to Lotte, which is a Korean company, at a 4x of revenue. Everybody thought that Lotte made a mistake, but Lotte took that company 7x from where they bought it. And Sanjay Bhai was a part of the game in that 4x transaction, also in that 7x transaction. So I would call this guy as a godfather of Indian M&A industry. Since my second investment is into pump industry, we all know Shakti Pump. Coincidentally, Akhilesh is my neighbor also, but he was ex-CFO of the Shakti Pump. So basically, we roped him from Shakti Pump into Silver Pump, and he was instrumental in helping us in shaping up our company so that additional 200 crore could be attracted. So as and when we'll make the investment number 3, 4, 5, 6, the sector experts will keep on increasing. I have a slide to present. The intention is not to show that, I want to put a disclaimer, intention is not to show that we are the best or others are not performing well. But many people do ask us, where do your fund stand as compared to rest of your peers? That is the reason I have prepared this sheet. So point number 1, my fund has a shorter horizon because we are looking at a definite IPO plan. If the company is ready for IPO, not only from financial point of view, from legal point of view, also from technical point of view also, that is the point I'm going to invest. That is the reason my fund has a shorter period. Most of the other companies have a longer period of 7 years plus. Plus, unfortunately, most of the companies have funds have a longer period because most of them may or may not have the exit capability in-house. Having an exit capability in-house is always an additional feature into any fund. Active ownership approach. The kind of companies we invest, they would require something beyond vitamin M. Vitamin M talking about the money. So such kind of a companies, in MSME companies, you cannot just invest and every month keep on calling the CFO, your last month turnover was 10 crore, has it become 12 crore? It will never become 12 crore. You have to do something. So active ownership approach, please do not misunderstand by saying I am entering into the shoes of promoter. That I can never do. That's not my capability. Wherever his pain point is, it could be anything. It could be finance. It could be some connections. It could be some sales order. It could be anything. We come handy, and not only we, our LPs also come because of the names that you know by now in active ownership approach. Active ownership, MSME, if I have to speak in Hindi, MSME का एक pain point है, गुरु मंत्र है. MSME का आपको pain point पता है, and if you have the ability to cure the pain point of MSME भागना चालू होता है. ये गुरु मंत्र बहुत important है. That is called MSME. This is another important point. We make virgin investments. See, I am not against VCs or Ps of the world. Today they are successful. They have made good money, but I do not go ahead with the companies where the VC or P is sitting. In my first investment company, when I had invested, the promoter had 100% stake with them. In my second investment company, the promoter and his father had 98.5% stake with them. So why I do not go ahead with the VC and P? First of all, the ideology will not match. Second, imagine the day of IPO. As I told, my entire fund thesis is based on the exit point. Imagine the day of IPO, the VC would say, I want to exit. The P would say, I want to exit. My fund wants to exit. The promoter may come and say, मेरे बच्चे की शादी है, मुझे भी 5% OFS में निकलना, तो there will be a bottleneck on the day of IPO. So that is the reason we do not go ahead with them. Another very important point in especially unlisted segment is more the number of shareholders onto the cap table, you are increasing your probability of going to the court. And the day your shareholders agreement lines up in any court of any world, you will never get the resolution. Resolution of a shareholders agreement is next to impossible. That is the reason we are avoiding and trying to keep the cap table so clean so that only 3 people should be there. Number 1, promoter. Number 2, my fund. And if required, the guy who is invested in my company, that is my own LP. You will not find the 4th investor in my fund. That's what in my investee companies I mean to say. That is the reason I said this is a point which is very important from IPO point of view. Next point. I am reasonably sure this would be the first time in India because Deloitte is my auditor. They are auditing 35 apps, and what they said is out of 35, 34 are not doing this. Sharing of the placement fee. Just now I have said that in first sheet that the deals are coming from our internal sources, which definitely means there is no investment banker when I invest. So there is some amount of investment banking fee that has been earned. एक unwritten rule है that wherever the investment banking fee comes, the fund manager takes it back to home. It's unfortunate, but that's part of the life. In our fund, we are taking it in the fund and giving it back to my investors. So when I made my first investments, I invested 30 crore, I got 3.6% as a placement fee. I took it to the fund and within 2 days, I returned it back to all my investors. In my second investment company, I got 5% fees. I took it to the fund and gave it back to all my investors. The intention is, in most of the AIFs, the investors have the tendency go down on NAV because of the management fee. And we do not want that to happen. So look at my fund, the guy who had been invested with me with last maybe 1 year, he also was down because of 2% management fee, but at the same time, he got a placement fee of 4.5%. So you can call it, though it is not allowed to say, you can call it as a FD, as a return plus equity upside, though this wording is not allowed. So next point is carried interest. Nowadays, 22% people have started carrying interest. My carried interest is only 15%. Next point is very important. Many HNS, many fund houses have invested based on this particular point. SEBI says the fund manager skin has to be into the game. So minimum ticket size what the fund manager has to invest is 2.5% or 5 crore, whichever is lesser. But we have invested as a Pantomath group, as a fund manager, as an investment manager, we have invested 20 crore. So my skin or our company skin is big time into the game. So that is the reason many investors are getting attracted on this particular point. Dry powder, I understand many are not doing this. Basically, I will draw your money if and when there is an investment opportunity. So those who have invested right now have given me only 45% commitment and balance will come as and when required. Exit strategy, I am working on a clear-cut exit strategy of IPO, that is exiting on the day of IPO and not to continue after that. There are 1 or 2 important points which I have not written over here, and that goes to our support system. Asit C. Mehta. See, since the day Asit C. Mehta has gave us a big support when it comes to post-listing, the people who have done the follow-on investment with us in our investment committee, in our investing company, have the horizon to stay in those investing companies for a longer period of time. But since the fund was exiting on the day of IPO, they were looking at somebody who will hand over them post-fund exits. And that's where Asit C. Mehta comes into the picture, because they have a broking arm, they have a research arm. So when it comes to post-listing requirement, the investor have that support from Asit C. Mehta. So that is the reason support system of fund. So fund successful करने के लिए you need good fund manager, you need good LPs, and most importantly, you need a good support system also. So Asit C. Mehta, Capso. So imagine when Deloitte go for a due diligence in my investing companies, they are going with the problems of the company, because Capso is giving them the ready-made problem of the company based on, because Capso has the ability to draw whatever available information about the company and the promoter, whatever information available in public domain, they can draw within 1 day time and give it to you. So our benefit that we have because of the support system, I do not come to know the problem of the company after due diligence. But before going to due diligence, I know the problem of the company. First problem I know because I know this company, and second because of the Capso, they have the ability to fetch the data from the public domain. So such kind of Pantomath owns 75% in Capso. So this is the support system of Pantomath that makes us so unique. Kamal, I am exceeding time, then please let me know. I have only 1 or 2 slides more to present. So in short, this is a Cat 2 fund. Fund size is 500 crore plus 250 crore green shoe. The term is 3 years plus 1 year. Management fee is 2%, but as I said, the investors who have invested earlier are not negative because of the management fee. We have waived the setup fee. The hurdle rate is a hard hurdle of 10%. The carried interest is 15% beyond 10%, so there is no catch-up. Auditor is Deloitte. We have already done our first closing on 20th of April. The final date to close the fund is on 19th October 2022, exactly 2 months from now. The NAV, the people who have invested in last 1 year have already got a hard distribution of 4%. And if I have to talk about the NAV, people who have invested 1 year back, the 100 has gone to 170 because of the follow-on investments that we have attracted. So in one line, if I have to summarize factors, then I would say that as of the time we are talking with you, what I have achieved in fund. Point number 1, 50% of the fund we have raised on our own. When we had raised the fund, there was no distributor in the picture. So this product was mainly available for we were trying to offer this product only to the institutions and the people who have been investing with us. Kamal, when he forced us that no, this product is very good, you can go out into the retail market, that's where we opened around 15-20 days back to the retail market. So if you see, my team was never into the market to raise the fund. Maybe 1.5 months back, we entered the market to raise the fund. So till today, 50% of the fund, hard commitment plus soft commitment, has been raised on our own. It's very easy to say and very difficult to implement, where VC is not saying, PE is not sitting, and a company having 400 crore turnover, you can invest. But yes, we have invested. Point number 3, we have not only invested in both the investee companies, we have managed to attract at least 7 times to 8 times of follow-on investments, which is a good number. 4th point, we have demonstrated our IPO experience in-house. 5th point, we have a good support system like Capso, Asit C. Mehta, Genie to help us from a various angles wherever this requirement is there. That is the reason I came on this platform and tried to present a story about the fund where we are convinced and we are working hard. So I think, Kamal, my basic presentation has been finished. If you or your colleagues have any kind of questions, I think we can go for a Q&A. If I have missed out on any point, please let me know. Happy to inform it to others.
Sure, Nishad. I think this was very insightful presentation. Can you please stop the screen share and then we'll move on to the Q&A.
Is it
stopped? So I have actually come across, various such products kind of in the past launched by IFL, Kotak, Edelweiss, and all these products have actually raised substantial amount of corpuses, and they are kind of, today, I think in such confused state that they have raised thousands of crores of commitments, but they are unable to call, even the second, third, fourth drawdowns because maybe opportunities are less. Now, in such a crowded market, one thing is that you are aiming to raise lesser corpus, which is good and which is kind of quite thoughtful. But don't you think already this is a crowded market? Already there are so many such large funds which are sitting on massive liquidity to kind of, fund to all these good companies that you are also trying to identify. Why is it a promoter that, you are trying to identify will give or dilute equity to you, and why not to those bigger names?
Absolutely right, Kamal, but very valid question. 2 distinguishing factors I would like to say without naming anybody. It's not proper to name. Most of the pre-IPO funds today, if you see, they have been heavily investing into the big boys. I'm talking about the companies who have surpassed the India's IPO capability. As a country, we have to accept we are not equipped for 10,000 crore plus IPOs. They are failing time and again. So maybe most of the investment in this particular factor, in this particular segment, have gone in those companies which are beyond the India's sweet spot of IPO. Point number 1. Second point, my companies are coming from my so-called 104 IPOs, the exact number that we have handled. So these are like repeat investors. I have been knowing them. They have been knowing me for so many years. So that kind of track record that we're showing that, okay, we'll come at X valuation, then our LP will come at Y valuation, and then you will go for a listing. People are liking this kind of a strategy. So we are going for a very small market, which is, above startup, because startup is difficult to handle, and in between the big boys. So that is something which is not too many players are in this particular market. You go for a bigger market, I'm sorry to take the name, ek name leta hu, NSE. All the Cat 2 have invested into NSE. Ola, all the Cat 2 that you have taken the name have invested into Ola. Sorry to say, I would not even look at them because that's beyond my appetite and I cannot do any of the services to them. So my appetite is below them and above startup. Wahan pe, I guess the names you have taken are not playing well. Maybe that goes beyond their status or maybe beyond their reach. And my companies are coming only from tier 2 and tier 3. I believe there the appetite is more for these kind of companies. Sorry to say, not a place of Bombay. I would never take a place of Bombay for my investment. So that's my answer to you.
So, basically, your space is, you can say, small size, as you said, SMEs, right? So
let's call it MSME. Typically, the promoter who has caused the revenue of 300, 400 crore, he's not there to run away, point number 1. And on his own, with 90% equity, he is there to stay for a long period of time. We want such people who have shown the ability to do something on their own, but not too big. The moment they start going about 1,500 crore term revenue, the big boys come and capture them.
No, absolutely. Ola and other example of NSE, and you took they will get filtered out on your other filter, which is like 90% promoter equity. That I understand. And this is, I think, very right space that you have kind of noticed. Now, we do not know what is the actual opportunity in this space, because obviously India is a very vibrant economy. I understand that there will be many manufacturing companies and many companies in variety of various sectors which will be falling in this space, but not all companies will actually reach IPO. So investing in NSC has this comfort that sooner or later it will reach IPO. But when you invest into a company which is in your territory, there is a very high chance that it may not reach till IPO. You are expecting it to reach to IPO in 2 to 3 years. If it doesn't reach in 2 to 3 years, it is kind of a failure in that context. So how will you ensure that out of your maybe whatever number of companies you wanting to invest and create portfolio, such problems do not happen, and then ultimately the time of the fund doesn't get extended, because that is something which gives pain to investors. We are setting the expectation in that context.
Absolutely right, Kamal. The situation would arise that company do not go for the IPO, and that is very well noted. So I would like to answer this question in two fronts. First of all, at the entry, at the inception itself, we need to take the proper care about what is happening. That's called experience. What is happening into the IPO, that probably by now we are understood. So investing into the asset-backed companies, investing at a lower P multiple. So this kind of having a clean track record, because Capso helps us in identifying the promoter's background. So this kind of atmosphere and knowing promoter for 3 years or maybe more than that helps us from last minute surprises. The IPO fails because of the last minute surprises. Preparation happen, IPO starts, IPO for 3 years before that. So we are basically trying to protect ourselves from last minute surprises. But still, in spite of that, if you try to say that IPO doesn't happen, point to be noted, we are trying to stay into the sweet spot of IPO also. But still, everything is done properly, all tick boxes are there, still the IPO cannot come. So that is the reason I said every fund manager have two kind of companies. One is a multi-bagger and second is a non-multi-bagger. So in non-multi-bagger, how do you perform? In terms of cricket, if I have to explain you, fund ka alpha hota hai, tail enders kitna perform karte hai. Tail enders are nothing but non-multi-baggers. So non-multi-bagger mein you need to protect your losses. And that's where every fund has 2 or 3 multi-bagger. I also have 2 or 3 multi-baggers. But the way I am designing, putting money into the asset-backed company, taking the right of IPO on the day, not having too many shareholders, having the M&A background, the promoter has to buy me back at 18 to 24% IRR. Imagine my stake into the first investing company is 3%, the promoter at 97%. If suppose he fails to go for IPO, the 97% promoter, rather than going into the court of law, would always prefer to buy me back at 18% IRR. But imagine the same promoter. For example, I told you that I informed that I am a director of Axiom, which is 3 years back 20 crore to 105 crore. But as a fund, I would never invest in that particular company because the promoter has only 36% stake into the company. So if I ask him to buy me back my shares, he would never ever do that. But a promoter who has 95% stake, to protect his personal interest, he would always have the money to buy back 5% to 10% stake. So this kind of a structure which helps us to, even for promoter also, to in case the IPO doesn't perform, they can always give us the exit option. Plus the kind of follow-on investments which I have done. Now the promoter definitely, now imagine my investing company number 1, I had invested 25 crore. Kamal, the 200 crore which has come, out of which 150 is a primary, 50 is a secondary. So 50 secondary, the promoter definitely today has the power to buy me back. So this kind of equity is not a safe option, be it state equity, anything. But what we are trying to do is trying to create an extra layer of safety around it so that there would be a minimum losses in case of a non-multi-bagger. And that's where the alpha lies. And last but not the least, having the charge over the assets. You would never find an equity instrument having the charge over the assets. I would like to add one more point, Kamal, here. Very interesting point. When I was investing in a second investing company, my team came and said the company would clock the revenue of 360 crore. The promoter came and said I would clock 425 crore. I put a clause of walk the talk into the shareholders agreement. Walk the talk means he gave me in writing, he will touch the top line of 425 crore and a bottom line of X. 5% deviation has been allowed. Anything beyond 5% deviation, whatever is the percentage of deviation, the promoter will give me the free shares into the company. So such kind of a promoter having a 98% stake would give you a walk the talk only and only when he has a 100% confidence into the company. So the point over here is that the sufficient net around the investee companies have been created to minimize the losses in case of a non-multi-baggers.
Sure. I think well answered. So obviously, the concept of the fund is quite interesting, and the confidence and the experience behind that confidence kind of is visible. And then hence the subsequent question that comes to my mind when I put myself in investors' shoes is that let's understand today if I want to allocate say 1 crore to this fund, how will it work? How much I need to pay now, in how many years, at what frequency will the fund be raising drawdowns, what NAV I'll be entering at, how will my NAV be different from people who have come before me? Can you please answer some of these
Yeah.
basic technical questions?
Yeah. So, first point is the last date to sign the contribution agreement is 20th of October, 19th October, which is exactly 2 months from now. So, we cannot enter into any contribution agreement after that. Second point, since the investors who have come before us have already infused 45% of their commitment amount. So today you need to give the fund 45% of your commitment amount. So for example, you are giving me a commitment of 1 crore, you have to put 45 lakhs right now. That is second thing. The balance 55% would come over a period of 6 months to 9 months. Thus, though PPM allows me 12 months from October, but I'm on a conservative basis, I'm saying you 6 months to 9 months from there. So typically, if I have to talk about the cash flow, Kamal, 45% right now, balance 55 over a period of 6 months to 9 months in tranches. By that time, my two of the investing company would have already come for the IPO because they're already 2 years old into the system. So maybe your entire money would be, though from point of view of SEBI, this is a 100% lock-in, but from cash flow point of view, your entire money gets locked in not more than 2 years at one particular point of time. Plus, for the benefit of investors, I would like to say that earlier AIF2 units were not in a demat format. But a few years back, we had given a white paper to SEBI requesting them to make it in a demat format. So these units from December onwards, not only for me, for all the AIFs, would be in a demat format. That would make you a easy sell kind of a thing, because since in a demat, it would be easy for anybody who wants to exit. So that's about the cash flow and fund position about the fund. And bonding, we are going to reinvest. So as and when we sell our asset, that is we exit, the proportionate units money will be redeemed.
Sure. Obviously, we cannot talk about returns. There is no assurance of return ever. It is an equity product. But still, because all the investors who will be kind of investing in your fund have a very decent opportunity of investing into listed space of small caps, mid caps. And here there is an additional illiquidity risk, though the time horizon of fund is not that long. But still, nothing is kind of known in advance. Though the fund is very interesting, concept is very good. You bring a lot of experience, and you have shown performance already. In the beginning itself by returning 4% of the capital to investors. But what is the targeted return that you can kind of give guidance to in the minds of investors who are kind of wanting to invest?
Kamal, if I have to wear from a typical investment manager's hat and talk in terms of the legal terms, then as everybody would know, equity may no fund manager is allowed to put a number to it. That's wrong also, and that's not ethical also. But still, if somebody has to put, I can tell you what our internal benchmark is. Let's talk like this. So the guy who had invested 100 rupees at 1 year when I had made my first closing, today he's sitting at 170. Reason being, the second investing company I had entered at a 250 crore post money valuation, 25 crore rupees I had invested. The new investment of 200 crore, which is 8 times of me, had come at 1,000 crore post money valuation. So that's multi-bagger I'm talking about. That's one company has given the 4x. So at an investment at an entire fund level, we are 1.7x. So that is what I have already delivered in span of little more than 1 year and 3 months. So plus 4% dividend. So consolidated it goes to 1.74%. That is the story.
1.74 times. And
that is the reality I'm talking about. That is the reality I'm talking about.
Yeah, you're talking about 1.74 times.
Absolutely.
Right? And this is for the audience. I will just like to add here. This is basically on the first two companies that they have invested. So obviously, investors may have this concern that now when I'm already entering at this higher NAV. But again, many more investments are yet to be done. So, Nishad, can you please explain this aspect, that why and how investors should not see this as a pressing concern, that they will be entering at a 1.74, kind of times NAV?
Yeah, very good question, Kamal. I personally believe that today what we have raised is this NAV has come on. We have a fund fixed commitment of 50%, and we have raised 45% of that. So this 1.74 has come on maybe I would say 20-25% of the entire corpus. So still 80% is still there. So if you go at 80%, tomorrow suppose entire 80% comes into my company, and 1.74 will definitely come down. So technically, I don't think you are paying a big upside to this, because on a smaller money in terms of corpus, if you have to talk, the 1.7x has gone on 20 to 22% of the entire corpus. Still 80% corpus is yet to be called in. So I would say still, in spite of the earlier investor going at 1.7, see, we gave it to them because they trusted us, and there has to be a money for a trust that they have shown to us. So it was our duty to give it to them. So my point over is that the 80% game is still pending. You can still come and we can still make the money. Don't worry, we are there. We also invested over 20 crore along with you. We are not there to go anywhere. So see, few people ask us a very good question, Kamal. You have invested 20 crore, you are giving placement fee to investors, nobody is doing that, your carried interest is very less. So why are you making this so investor friendly? The answer is very simple, Kamal. The internal intention is to launch a bigger fund. The bigger fund, Vikram, is in US, not to spend too much time, but to make the preparation for the bigger fund. But Kamal, believe me, we also know we have investors for a bigger fund, which is going to be 3 times of this fund. But we know one thing internally, that bigger fund would come if and only if we show good returns in this fund. In case if we fail in this fund, forget the bigger fund, there would be no other fund for company. And 20 crore putting from the first generation promoters into fund is a too big cost. Too big learning course, I would say. Only when they have a reasonable confidence on themselves, they will put 20 crore. I hope I am able to explain this to everybody.
You have put it very pertinently. Absolutely, we cannot quote any number, but obviously, the endeavor is to generate competitively good returns and higher returns. And those investors who have invested in larger names like the ones we took, obviously should understand that they will be investing in larger companies, and this fund will be investing in relatively smaller companies, and obviously hence the risk reward is totally different. So one needs to understand from that perspective. Now moving on to the subsequent question, where you mentioned that a fee structure is quite investor friendly. You have explained that, but I want you to just focus on this question and explain that again. Why do you say, because this is another pain point which investors always have, ultimately before signing, they would want to and kind of be convinced that they're not paying higher fees, and absolutely it is their right to understand that, and we really value that. Price is one of the factors amongst 5 P's that we analyze, which is people, philosophy, performance, portfolio. So hence price is also important factor. So please kind of answer this question also.
So price about, you're talking about, are you asking me about 1.7 times that price you're talking about?
No, the fee structure.
Oh, fee structure. Sorry. My apologies. There was a slight lag. So fee structure is basically, Kamal, there's a flat fee of 2% management fee as per the PPM. And okay, I would like to say that most of the funds have a 2% fee on the NAV. But though our PPM also says on NAV, but in the month of June, we had given an email to the existing investors that this fee would be charged on the drawdown amount and not on the NAV. So good point, instead of NAV going 1.7, everybody is still paying fee on 100, not on 170. So there we have given a safety net, again, safety net to our investors. 2% management fee, I cannot assure you, but you will always keep on getting the returns from your placement fee. So let's talk about the practical. The guy who has invested 1 year back, by now he has paid more than 2.5% placement fee, management fee, but in return he has got 4.5% placement fee. So I guess we have tried our best to compensate when it comes to placement fee, because I won't be able to promise you how much placement fee I would get in investment number 3, 4, 5, but the thumb rule is somewhere between 2% on a lower side and 5% on a higher side. That I would always keep, and I can give you an open statement. Whenever I get placement fee, the 100% of the placement fee will be shared among all the investors on the basis of their units. So they will always be compensated somewhere or another in terms of management fee. and the fund would charge as per PPM not more than 0.3% beyond this, and there is no other charge beyond that.
Most of the funds that have come in the past in this category, or any new funds that I think would be coming in future, will definitely be talking about investing in tech-based companies. I have always heard, the investing in tech-based companies, and I think most tech-based companies in Indian context would have scaled to a level that they can maybe aspire to come up for an IPO, not without diluting their equity. So by sticking to this principle of 90% promoter-owned businesses, I think you will be missing that segment. Wouldn't that impact, your performance?
Kamal, very well asked questions. We do get opportunity to invest into tech-based companies every now and then, but I could see a couple of names were very much familiar to me. They always say that दुनिया घूम के आते हैं बाद में asset backed company में पैसा डालते हैं. I would still say even though Nazara has come, even though Zomato has come, I would still say that the kind of investors we work, we find it very easy to sell the asset backed company. So tech-based company are good. They can give you 50 times return. See, we are not trying to give here 50 times or 100 times return. I am not promising that. I want certain return, but I want more safety. I want this product not to fail. I want this product to pass and pass with good marks with the assurity of passing. That is the reason I'm shying away from investing into the tech-based company. But believe me, every day and day, we are getting opportunities to invest into the tech-based company. I have my own startup, so you can imagine how many tech-based opportunities I must be getting on a day-to-day basis. So tech-based companies I also do have, but somewhere curtailing our or compromising our this thing, but trying to stay away from a tech-based company. We may invest in one of the tech-based company as a pressure from the investors, I would say, because our existing investors are pushing us to make at least one tech-based company. But I don't see making more than two tech-based companies over this thing. We might lose this 50 times return. I do agree with you, but I think we are good with that. Might as well play with safer hands than playing with aggressive hands.
Sure. Can you please elaborate this statement that I do have my startups? What do you mean by that?
Okay, so Pantomath is own vertical called Copgenie. And that is headed by a different team altogether. Mr. Paramjit Makani is the guy who heads that vertical, wherein we incubate the startups. We help startups to go to the next level. Most of the startups from Copgenie are helping my investee companies in their AIs, in their machine learning. So all the support for this is called support system for my fund, which is coming from startups. So it's a give and take. We help them in incubation. In return, they help us with the artificial intelligence. So that's called my startup vertical. Nothing to do with the fund, is a support arm of Pantomath.
There is this question on the chat box. You mentioned that existing investors have invested 45% and now new investors will have to shell out same, and in less than 12 months, 55% balance will be paid out. Do you have an existing pipeline of companies in which you are considering investing in? Which sectors they belong to?
100%, sir. 100%. Believe me, all the companies are from a manufacturing sectors. Most are related to the machine sectors. So we do have a pipeline. That is the reason we have entered into this business. See, these are the same companies we were looking for IPO. So we not only have the companies, we have their growth trajectory also. We know their background also. We have already done their due diligences also. That is the reason we are so confident that we can do it. Only thing is, point is, right now we are in a hurry to close the fund. So this is the reason next 2 months the entire team is concentrating on closing the funds. But we do have a lineup for the next companies, and sector agnostic, but all are asset backed, mainly from the food sector, mainly from the machine manufacturing sectors. These are the sectors that we are very bullish on, because IPOs are easy to do. Exit options are easy to do. People do understand asset-backed companies. I'm not talking against software and fintech. They have then made their own money. Maybe they are more successful, but that's not area which we want to enter.
So this is a subsequent question. By manufacturing, you mean to say chemicals or engineering?
Also, my first company was a specialty chemical company. The second company is a consumer electricals. The third company is going to be the specialty manufacturing, machine manufacturing, which only 3 or 4 guys in India are manufacturing. So all you talk the manufacturing sector, we love it. Asset back basically, but not the real estate. Point to be noted. Asset back, but not the real estate.
Sure. Any of these companies are subscribers to government PLI?
Yes, they are.
Sure. What is the targeted time horizon that one should keep in mind in terms of overall I would say time of the fund?
Okay, so on paper, if you have to talk, then from the final closing, it is 3 years plus 1 year plus 1 year. So that's the official timeline. But overall, as I said, the 100% of the funds won't be locked in for more than 2 years, considering the way we are spanning out our investments. So in and out would be, I would say, not more than 4 years on a realistic basis. So this is a shorter fund.
Sure, I think most of the questions have been well answered.
I would like to answer a question which I just read here. So if your permission, I can take that question.
Yeah, please go ahead.
Somebody has asked, what if you could not invest all the money? Yeah, that question, that do happen considering my fund management experience. Nobody in the world could invest 100% of the raised money into the investment. And that's where most of the fund managers make the mistake. They hit the panic button and go and make the wrong investment. And this is where the support system of Pantomath comes to the picture. Just now told that my one IPO is coming next week. It is 300 crore IPO. Before even the IPO, DRHP was filed. 80 crore were subscribed by the good names. You open this thing, you will find who are the good names. So people who have invested, we have the people who have told them these opportunities. As a fund, I always have these kind of opportunities coming my way. So I have, as a Pantomath, which is a merchant banking entity, we have 4 IPOs lined up in next 4 months. So that window, Kamal, will always be open with my fund to invest in those funds before IPO. It's a shorter horizon period, maybe 6 months to 9 months, which I have been doing, but invest along with the merchant banking, invest also and exit also. So that window is always open with me. So I need not have to go on selecting, the survival test company. In worst case, I'm not able to fulfill that 100%. Then that 20% last investable gap can always be filled up through investment banking. Once again, that is the support system that we have.
Right, understood. The remaining 55% will be called for in how much time period?
As per PPM, 12 months from October, I would say 6 months to 9 months from October. Kamal, I not able to hear.
Yeah, so I was saying thank you so much for answering all these questions. Some of these were tough questions. I wanted to understand them, for myself to kind of, enhance my conviction about the fund. Obviously, your fund has a very good concept, and the passion that you bring and the background track record in terms of 104 IPOs absolutely kind of, is good. And that is what kind of has made us do this webinar for our clients. To all the interested, clients and prospective clients who have been asking questions, I really thank you for asking all your questions. And I hope, we have been able to answer some of these questions kind of to your satisfaction. If any questions are still unanswered, we are happy to take calls with you. We are happy to organize one-on-one meeting with Nishad. Let us know, you can come to our website, PMSAF World, book your appointment with us by clicking on book a call button. And we have a team of specialists who will help you organize meeting directly with Nishad. And obviously, we have deep dived this fund beyond whatever has been discussed here. We have tried to discuss in 1 hour all the basic facts about the fund, which investors generally ask for. But beyond this, in terms of meeting with Nishad and the team and understanding this fund across many of our large clients who have actually based their confidence has already been done. And on the basis of that, I'm saying, we have a conviction about this fund. But yes, ultimately, every investor should make a very well-informed decision, after studying and analyzing a product. And from that point of view, we are welcoming any interested investor to kind of come to us to have understanding about this product if you are really keen. Thank you, everyone. Have a nice weekend. Thank you, Nishad.
Thank you, Kamal. Thank you, everybody. Thank you.
My pleasure.